Welcome to the Buying a Home in the Netherlands webinar. I am joined today by Ludo, my lovely colleague, who will be assisting us with answering questions behind the scenes, managing the Q&A in the end as well, and just being the energetic, lovely guy that he is. Also to brighten up your screen a little bit. And we have Robin from Mr. Mortgage, who will be telling you all about finance mortgages and, of course, answer any questions that you have. We always start a little bit later to give everybody a chance to join. Please note that the webinar will be recorded and shared with you guys, so no need to take a lot of notes. Today, we're going to talk a little bit about us, about renting versus buying, about the costs of buying a home and tips to win, and a little bit about the timeline, and then we'll answer the questions that you have. Please put the question in the Q&A. Ludo will try and answer some of these already in the background, and if there's anyone left, any questions left, who knows? We'll try and answer them at the end as well. Let's see if we can click on next. But first, we'd love to get to know you a little bit better. So what we did is we have a little poll for you guys. We'd love your answers. Not mandatory, just fill them in. And then we can get to know you a little bit better and maybe tailor make some of the content towards your profile. So I'm seeing the first answers come in. So the questions are, where did you find out about this webinar? How old are you? And what does your household look like? And what made you decide to buy? I'll wait a few seconds for everybody to answer. So where did you find out about this webinar? The website, Facebook, a lot of them Facebook, some through newsletters and other channels as well. That's great. How old are you? The majority of you are between 25 and 34. There's a few people between 35 and 45, and there's a few 46-plus-year-olds. Great to have such a diverse group in here tonight. We've got singles and more couples and a few families, and the majority of you would like to settle in the Netherlands. Settle in the Netherlands. Some of you think that the rents are too high, would like to build up equity. All good reasons to actually purchase a home. Where would you like to buy? The majority of you are saying Amsterdam, some in The Hague, some in Almere, Eindhoven, Haarlem, Rotterdam, a few, and then other. I'm always curious to know what other is, so please pop that in the chat. This is not a question that you have. This is an answer that you have for us. So if you have a location that is not on this list, please pop it in the chat. Thank you very much. Let's continue. Greatness is achieved in the agency of others. Testament is me being joined by two great guys who know all about buying homes and getting mortgages, but also when it comes to Expat Housing Network, it's the team. You'll see Ludo's picture in this team. He's part of the buying team. So if you decide to move forward with us, you'll probably deal with one of my colleagues. And what you can see is that they're either from abroad or they have actually lived abroad. I think, Ludo, you've lived in the US for a little bit. And so we all know what it's like to move to a new country, set up a home there, and we all have plenty of experience in actually buying homes. So that is good news. Another brief introduction about EHN. We're not traditional real estate agents. What does that mean? We don't have a background in real estate. We don't do it for the bricks or moving or closing deals. We do it to help people find a home, and we only focus on buying versus and renting. In your case, it'll be buying. Maybe a good comparison is that if you deal with an agent that does selling and buying as well, selling currently is much easier than buying, so they'll naturally gravitate towards the selling client. We do not. We focus on buying, and we've become quite proficient at it. We charge a fixed fee, no commission. We'll talk about it a little bit later. We don't believe you should pay more if you're already paying more for the home, and we know what it's like to settle into a new country. Also, what's our added value? Sometimes agents take offers from our end more serious than if you submit an offer yourself. Why? Because we've done our due diligence. We don't do crazy, strange, stupid offers. Also, we can sometimes book in viewings when it's no longer possible. We support by reviewing legal documents and property documents, and we also help define the market value through market data. And of course, we'll inform you about the rules and regulations, and we make sure that you don't make the same mistakes that we made. By the way, I'm not sure if I ever introduced myself. My name is Kimo. I am the founder of Expat Housing Network. and have helped with buying over the last couple of years as well. I'm no longer currently offering my services, but my team has become better at it than I am. So at some point, you you are no longer worthy of helping people with buying a home. I do have some experience in terms of knowledge as well, so I'll try to share that with you. Robin, maybe you'd like to share a little bit more about Mr. Mortgage.
Sure thing. Thanks, Kimo. So I'm Robin, the second from the left, and I'm joined with by my team, by Cesar, one of the other financial specialists, and we always love to help people coming new to the Netherlands or already here to kind of guide you through the maze of mortgages. It does not necessarily have to be a maze when you know your way around, but that's where we come in and to make sure that you get the best option out there and that your finances are well taken care of as well. So that's what we love to do. We're joined by, on the right, Özkan, our financial wizard. That's kind of our mortgage Google, if you will. He knows really everything, all the specifics, all the nitty gritty, all the things that you wouldn't think about when closing a mortgage, and he takes care of all the mortgage applications perfectly. And then we have Egle, our lovely growth marketeer, making sure that we actually get to know all of you guys really. So that's or you get to know us really. So that's our team, and Mr. Mortgage was founded because we kind of got annoyed by not being able to give the service we wanted to at our previous employers. So we thought, well, if you think you can do it better yourself, you better do it. So that's what we did, and loving it right now to help you guys get the best option out there and to take care of your finances in the best way possible. So that's us, and that's what we do.
Perfect. Thank you. Thank you. I'm already seeing some things in the chat pop up. Maybe we can touch upon them later as questions, Ludo. But thanks for the introduction, Robin. And great to have you guys on. There's a reason why we're doing this together, and that is because we definitely believe in the services and the value that Mr. Mortgage can add. I can talk about that a little bit more later, but don't hesitate to reach out to these guys to schedule a call and learn more about what it is that you can borrow and spend. Today's goal is to add value to you. We believe in sharing information freely, so please ask away and fire away those questions because we want to make sure that this actually adds value to you. This presentation is I wouldn't necessarily call it a generic presentation, but we wanted to give value to a lot of people, and therefore we can't necessarily really dive into very specific subjects during the presentation. If you want to know a little bit more about certain specific subjects that you have an interest in, then please do put them in the Q&A. If they become too specific, then we might revert you to a intake where we can actually have a private session with you. Some news. It's no longer really news, but I keep saying this is news. I actually moved the Newsflash away from this, but this is the first bit that we'd like to share with you. The National Mortgage Guarantee. This is a insurance that will allow you to not end up with a debt if your house becomes worth less than your mortgage is and you're forced to sell because you lose your job, you lose a limb, you lose a partner, God forbid. What is the case is that they do restrict it, so not everybody can benefit from this insurance. So if you buy a property and the value of that property is 325,000, up to 325,000, then you'll be able to get this insurance. If you buy a property, it's valued more, then you won't be able to get this insurance. So let's say you buy a property for 340,000, but the value actually comes back at 325, then you're in. But please note that there's a few costs linked to this, or there's one cost linked to this. Actually, getting the mortgage costs you 0.7% of the mortgage amount. But in return, you get better interest rates and you get insured. So if something were to happen, then you're at least safe for any outstanding debts in case you have to sell or foreclose. Then transfer tax. Maybe Roman, you'd like to share a little bit more about that.
Sure. As of the 1st of January this year, the one thing another has changed regarding transfer tax. Now, usually what happened if you bought a house, if you were an investor or a first-time home buyer or a second-time home buyer, you had to pay 2% transfer tax. Now, what the government tried to do is to make it a bit more easy for especially starters up until 35 years old to be able to buy property and not necessarily to all these properties to be taken away by investors. So what happened is the transfer tax was cancelled for anybody that is younger than 36, so up to 35. Up until 35, so younger than 35, that is. So then you don't have to pay transfer tax, but only if you buy for less than 400,000 euros. So even if it's 401,000 euros, then you do have to pay the full 2% over the full amount of the purchase price. Now, there's a couple of scenarios then, of course, that are a bit different and might not necessarily be stated in what I just mentioned. On the left, you can see the basic explanation. So Kate is single, under 35, purchased a property of 400,000 euros, so therefore the transfer tax is 0. In the middle, you can see Kate is 37 and John is 33 years old, purchase price 400,000 euros. So then it's split, the ownership is split probably 50-50. So that means that Kate pays 2% over 50% of the purchase price and John pays 0% transfer tax over his 50% transfer tax. So far, so good. Now you can also see Kate and John are both 33 years old. Kate already owned the property. John is a first-time home buyer. Then there's a little nuance here. Kate pays 2% transfer tax because it's second property. If she bought her second property after the 1st of January this year. So if you bought a house before the 1st of January this year, and then you buy a house this year again, and you're under 35 and you buy less than 400,000 euros, you don't have to pay transfer tax. Now, all of this is really fast, of course. So to check if you really have to pay transfer tax, just let us know, check in with us or your financial advisor, and just make sure that you know what the situation is if you do or do not have to pay transfer tax, because it can save you quite a bit.
Thank you. Since we'll share this presentation, there's a little button here. I'm not going to click on it now because then I'll lose you. But when you get it, click on the button and then you'll actually go to Mr. Mortgage's website and they'll be able to help you with that transfer tax checker. So where in the process are you? Time for some more questions your way. We'd love to know where you guys are in the process. I'm very curious to know if you are researching still, orientation phase, or if you're actually viewing properties, if you made an offer, or maybe you got an offer accepted, hooray. Also, we're curious to know if you've chatted with an agent yet or with a mortgage broker or advisor. I'll give it a few seconds to let you answer this. Thanks, we're seeing a lot of answers come in. So the majority of you are researching, so they're still in the orientation phase. That's great because that means we can add value to you during this session. Some of you are viewing properties and some of you have made an offers. How bold, how bold, how bold. Did you chat with an agent yet? Yes, some of you said, but the majority of you said no. Then I'm curious to know what you'll learn today. And from those who've already chatted with an agent, what did you learn that was new? And the same thing applies for whether you chat with a mortgage broker or not. So thanks a lot for sharing your info. Let's move on. So renting versus buying, Robin.
Yes, renting versus buying. So what should you do? There are some pros to renting, of course. For one, you have some flexibility. It's easier to move to a new property because you can just usually have some time that you have to a notice period that you say to your landlord or lady saying, well, okay, I'm planning to move, but that's really it. You don't have to pay any taxes or maintenance fees. That will all be taken care of by the owner of the property. And usually there's no down payment required. So those are the pros. When you do own your own home, you do have to pay taxes. You do have to take care of your own maintenance, and it can be a bit harder to move because you first have to sell the property. So then before you do that, then there's a couple of things to take care of there, of course. So those would be the pros to renting your home. But of course, you don't necessarily have to rent your property. And if we go to the next slide, there we go.
Sorry.
No worries, no worries. I can have a very soothing voice, I know. Why should you buy?
Start drinking Coke, sorry. There you go for it.
So why should you buy? What are the pros to do buy a property? For one, you have stability. The stability means that you have stability in your monthly payments usually, because when renting, you're subject to what the landlord or lady will charge you in fees. They can in rental payment, and that can change every year. When you fix your interest, then you know you have stability about your mortgage. So that gives you some stability. Also, yeah, it's your own home. In your monthly payment that you do pay on your mortgage, you don't only pay interest, you also repay on the mortgage. And therefore, that's kind of saving because that is money in your bricks. So when you sell the property, most probably, you will get those monthly payments of repayment of your mortgage back when you sell it. And one other thing, the mortgage interest deduction. That means that you have a tax benefit over the interest that you do pay over your mortgage over the course of time. Now, those are all pros to own your own home, and then to look at some cons of renting your own home. Like I said, the rents will probably keep on rising, especially in the larger cities. There's no tax benefit when renting your own home, and no creation of wealth in the sense of building up equity in the property that you own. So those might be reasons to buy your own property. Now, we also made a comparison between renting versus buying similar properties in the same area, pretty much the same square meters, and then to see, well, what is the difference really? So on the left-hand side, you can see what happens if you rent your property, and then you spend 2,250 euros per month on rent. Whereas if you buy the property, your monthly payment in an annuity mortgage, we can look into that later as well, there's 1,832. So for one already, the buying would then be lower in monthly payments. Though, as mentioned before, you do have to make an investment at first. So the closing fees are approximately 23,000 euros here. You can see that on the right bottom. Then on the left, you can see the rent is 27,000 euros per year. So that's already a large difference. So in the end, we made a calculation. So when do you break even really? And that is in 15 months. So even if you own the property for over, well, let's say 1.5 years, right? So then already you break even, where it makes more sense to buy versus rent. This is the financial logic side of things. So there's always also the emotion. How do you feel? Do you want to keep living in the same property for a longer time? So that really depends on what you feel comfortable with. Now, essentially, when comparing these two, after 5 years, if you have this mortgage, you have a mortgage of 525, interest rate of 158 approximately. Then after 5 years, the mortgage that you have left is 453,821, to be very exact. That means in 5 years, the equity that you build up is 71,000 euros. So that's what you build up already in 5 years. So that is also definitely a pro to buy. Again, we don't want to push you in anything. We always look at, make sure that you look at what your specific situation allows you to do and what you feel comfortable with, because that's the most important.
Perfect. Thank you. Then we'll talk a little bit more about the market, because we get a lot of questions asked about whether currently this is the right time to buy a home. Am I not buying at the top of the market? And if you see this little graph, then the average transaction price, which is the blue line, is going up, and I don't foresee it going down anytime soon. Why is that? So I'll take you along on that. So the first thing is that we call it, well, fiscal benefits, or the fiscal policies that the government have stated or have initiated. And one is tax exemption. Robin already mentioned that. What we're seeing currently is that people that are technically not paying tax exemption are putting that money back into the offers that they're submitting. So prices are increasing because of that. But also interest rebate is an interesting one. And why is this impacting? Like Robin mentioned a little bit earlier on, you can deduct the interest off your taxable income at the end of the year. Why is this interesting for the price development? Because it drives more people towards the buying market. And there's also no capital gains. So anyone that sells property can actually use that profit, if they've made a profit, to put back into the market. So we're seeing that as well. And maybe one thing I forgot to add here is that, well, parents can still kind of like gift their kids up to a certain amount of money. That we're also seeing flood into the housing market. And then we have low interest rates. Well, Robin shared it, what, 1.58 approximately, I think is maybe a little bit higher for some mortgages at the moment, between 1.5 and 2. But again, money is cheap at the moment, especially comparing to what, 5 to 10 years ago, when it was closer to 5%, and maybe 30 years ago when it was closer to 8, 9, maybe even 10%. But ask Robin for the specifics on that. So money is cheap at the moment, and the rents are high. I'm not sure why this is gray. Rents are high, and because of that, because of all these reasons before, we're seeing that the number of people wanting to buy versus the amount of properties that are actually on the market to buy is way out of line or imbalance. So we're not building fast enough. We have a strong history of not achieving our quotas when it comes to building property. So there's a shortage in the housing market because of this. I must say that it's partly because of these top reasons, right? And I don't foresee this changing anytime soon. We have a relatively liberal government at the moment, so I don't think that they're going to change anything that might yeah, how you say that might make their electorate or their constituency unhappy. And most of them are homeowners or aspiring homeowners like yourself. So I think that we're not going to see anything change anytime soon. But I must say, this is very on a micro level. When we talk on a macro level, that it's not my forte. I'm not looking at long-term inflation. I'm not looking at what maybe the effects of COVID are. But if we look at these things, and if COVID has taught us anything, then housing has become more important than ever. We're going to most likely see the prices increase this year, next year, and who knows, maybe even the year there afterwards. So when people ask me, is this the right time to buy? I say yes, but please don't buy for 1 or 2 years, because that means you're technically speculating, right? Hoping that the price will either stay the same or will go up a little bit. So if you buy for a little bit longer period of time, 3 to 5 years or 5+ years preferably, because if there's a dip, technically that only becomes a problem when you have to sell the house. And if you can stay in the home and weather that storm, then you should be fine. So this is what we tell people. Also, what would you need in savings before you start? So we've made a little table for you guys. Robin already talked a little bit about the transfer tax. This is also the highest one. The third column shows whether things are tax deductible or not. So can you deduct these amounts at the end of the year of your taxable income? Anything related to a mortgage is tax deductible. So the notary will draft two deeds, the mortgage deed and the transfer deed. The mortgage deed is the agreement between you and the bank. The transfer deed is the final deed that makes you owner of the property. The mortgage deed is tax deductible. These prices, by the way, differ per region, right? So if you're buying in Amsterdam, you might pay close to 1,100 euros. If you buy, for example, on the outskirts of some provinces, you'll pay close to 500-600 euros, 700 euros maybe even. But please be mindful that this might change depending on where you're looking for a notary. The bank or mortgage broker, they do charge as well, but please note that these guys are tax deductible. So Mr. Mortgage, you guys are tax deductible. And what I always say is that a bank is kind of like your retail shop. You go in there to try to sell you their products that they have on stall. So that's maybe 2 or 3 products. And yeah, that's what they'll try to sell you. It might not be the best for you, but they'll try to sell it. The independent mortgage brokers, in this case, Mr. Mortgage, they have a variety and a big range of products they can offer you. And they're kind of like your personal shopper slash stylist. They don't care what you buy as long as you're happy with it, you understand what you're buying for, and you look good in it. So I would definitely advise you to talk to these guys as well. And then also go and talk to your bank, right? It only makes the difference so much, so much bigger. So then you have the typical real estate agent. They charge 1 to 2%. I don't understand why they charge a percentage of what you pay for your property. We charge a fixed fee. We're working on it to be tax deductible, but I think that's going to take a little bit longer for that to get introduced to the market. So then you have the appraiser. Why is he tax deductible? Because it is linked to the bank giving the mortgage. And then you have the technical inspector, which is not tax deductible, but advisable to get in. The interpreter is mandatory if you don't speak Dutch to join you when you sign that final deed. And you have the bank guarantee, which we can talk about a little bit later. Then, like I mentioned, the national mortgage guarantee does cost a little bit of money, but luckily that is tax deductible. So, 3 tips to win in the current market. Um, First thing I'm going to talk about is value, value, value. Why is that important? Because a lot of people ask me, what should I overbid? Well, this is a property that is on the market for 395,000 euros. That's lovely, right? It's a beautiful property. And I think a lot of people will look at this one because it's recently renovated, looks nice. Then normally this would pop up one at a time, but we'll see everything in one go. What you see here is the asking price, but the asking price is the price that the selling agent puts the property up on the market for. He's relatively free when it comes to that, right? There's no restrictions on that. Of course, he's not going to put it up for half of what the actual value is, but there are ranges in which they work. So this is the asking price, 395, but the actual market value is 415. Somebody buys it for 435. Congratulations. Then what we talk about is a difference of about 10% in the asking price and purchase price. The difference between value and purchase price, however, is more closer to 5%. Okay, now let's take agent number 2. What he does, this is the exact same property, but he puts it up for 375,000 euros. Then suddenly the difference between asking and purchase is 16%. Let's say everybody starts using this narrative, right? Then people are going to start saying, okay, oh no, you should definitely overbid 16%. But if we then go back to this one, and people start overbidding 16%, they're going to offer more than what they originally should have offered, right? So I think that's very important to maintain a proper narrative, and that is that don't look at the asking price as your reference when you submit an offer. Look at the market value. How do you find out the market value? That is what Ludo does better than anybody else in this world. So definitely reach out to us. We're happy to help you out. But of course, we also know that there's a public space where you can do that. It's called the Land Registry, the Cadastre. It's a bit of a maze. It's a bit of a puzzle. But hey, what can you expect? It's a government website. And there you also find some information about property selling prices. But what I want to stress with you guys is look at market value. Don't look at asking price. A winning offer. What is a winning offer? Offer a good price, not always the highest price. Let's go back to this one quickly. Let's say you've offered for 50K, right? The guys at Mr. Mortgages said, okay, hey, so based on the expected market value, you're probably going to get 415. The bank's not going to give you more. And if you have some savings, let's say you have 20,000 euros in savings, then you technically can only offer this. But if you offer too much because you don't actually know what the market value is, or you didn't get a chat with Mr. Mortgage, then the selling agent will think, okay, hey, so 450, that's quite a lot of money. It's 40 or 35,000 euros over the market value. Let's see if they actually have that cash. And if you don't share that you have that cash, he's not going to accept your offer. So a winning offer is not always the highest price, but it's a good price, right? It's a considerate offer. And most important, the seller wants to have security. So he's not going to go ahead if he thinks that you are not going to move forward with the deal. I saw a question in the chat that somebody asked, like, um, what are some of the mistakes that you made? Well, when I bought my home with my partner, it was offer number 7, by the way. I'll tell you all about it at the end. But we were able to buy that property because 2 buyers before us had to pull out because they couldn't get their finances through. There was some like bullshit excuse that they had. I don't know, they didn't get money from their parents or something like that. But that really pissed the sellers off, and they were like, you know what, we just want to sell it to the first decent bid, right? And that was us. Thanks. Really lovely. Great to hear that. But if you offer too much and you're not serious, or if you share with the agent that you're not really serious or that you've not done your due diligence, then the seller will not have the security that you're going to move forward. Also, if you add all these clauses in your offer that state that you're going to pull out if you don't get your mortgage, that if you're not happy with the technical inspection, you're going to pull out. If the seller doesn't do this, and this, you're going to pull out. Then the seller will most likely pick another offer. But please, when it comes to the finance clause or technical inspection clause, talk to your advisor about this. We wouldn't advise you to take it out without getting consent from your advisors. Also, offer the least amount of hassle, right? Some people ask a lot of the sellers because they think that the property should be delivered in a perfect state, but technically, most of the people buy the property in the condition that it's in at that moment. So the more you ask from the seller, the more likely it is that he'll go for an offer that's a little bit easier. Also, consider that if the seller can only move into his new home the 1st of January 2022, for example, and you ask him to move out the 1st of October, that's not going to sit well with the seller, right? He needs to move out, store his stuff, and then move back into his new home. So also take into account why they're selling, when they want to move out, so you don't offer something that's inconsiderate. And then offer personal touch. What I would do is I would write a little piece about myself, add some photos, and share why you really like that property so much, because the majority of those sellers will have lived in that property, so they'll have an emotional connection with it. And if they have to compare your offer to a investor offer, most likely they'll go with your offers if it's exactly the same. This was by by the way to go over that example of not the highest offer. Then the last thing I'll share is due diligence. There's 2 people that you could actually invite to come and see the property. One is a technical inspector. She'll check what the condition of the property is. The other one is the appraiser. He'll define the actual value. The appraiser defines the actual value by looking at the property, doing desk research, and having that reviewed by an independent institute. Then only he can actually send it to the bank. But my question to you guys is when do you book these guys? Do you book them before or after your offer is accepted? Maybe pop it in the chat, and then I'm curious to see your answers. Like the other day, we had a lot of like different answers, so I'm curious to see what you guys have. So A says before. R says after, before, after. I feel before, says Bargav. Some say before, some say after. Okay, we've got a mixed crowd here. That's really nice. That's really nice because that means that we can still add some value. If everybody we've given the right answer, that we'd be like, okay, that was too easy. Can we buyers decide is a question. Yes, you can decide when to get them in, but please note that this has an impact on whether your offer is going to be accepted. I'm going to spill the beans here. You get them in after your offer gets accepted. I just show you that table that showed that the appraiser costs about $600 and the technical inspector about $400. So that's a total of $1,000. So let's say you get them in before your offer is accepted and you don't get your offer is accepted, then you lose that money, right? So get them in after the offer is accepted. Why is that important? Because what is the key to these guys is understanding if you can actually move forward and get your financing from the bank. So the advisor, the appraiser needs to define the actual market value, and the technical inspector is going to share with you if the property is in good condition. So it takes about a couple of, like for the appraiser, it takes about a week, maybe 9 days to get the report done, sometimes a little bit faster. For the technical inspector, it's 2 days after they've come into the property. So book them in as soon as possible. Afterwards, I'm going to talk a little bit more about the timeline here. The purchase contract is when you actually sign the agreement that you're going to buy, the seller is going to sell, but you have 3 days thereafter. It can't end on a weekend, on a public holiday, to pull out without giving any reason. So by the latest that you want to get the results of those reports is before the cool-off period ends, right? Preferably before the purchase contract is signed, because that gives you maybe a little bit of room to negotiate, especially if a property is not up to par in terms of condition and needs a lot of renovations. I'm going to talk a little bit more about the timeline, and then I'll be out of your hair and we can go to some of these frequently asked questions and answer all the questions that you have. So this is a little bit of a skewed period. So this can take up to weeks, months, depending on what you find and how soon your offer is accepted. So you start to search, your offer is accepted. We talked a little bit about the technical inspection and the appraiser, get them in ASAP. Then you'll sign the purchase contract, great. The mortgage application technically can be done. Well, they can start up the process way before. So don't wait talking to Mr. Mortgage until you sign that purchase contract. Talk to them before you even start, because it's going to definitely help you out with learning what you can borrow, what you can spend, what to look out for. And these guys are experts. So have a chat with them way before you start. Then you have that cool off period. After this, you're committed, unless you have these clauses in your contract that you can pull out. But technically, this is when the moment starts that your mortgage is going to get accepted. Take about 4 weeks, especially in summertime, that your mortgage is approved by a bank. Sometimes takes a little bit longer. I know these guys from Mr. Mortgage can do it much faster, yeah, I don't want to put any pressure on them. Then, about 7 to 10 days before you'll become the owner of the property, you'll get a final statement of completion. This is kind of like the final invoice. Look at it like this. So you have to pay for the property, and then you also have these buyer's costs or closing fees. So you have the purchase price plus closing fees, and then deduct the amount that either you already paid as a deposit or either that you got from the bank, and then you'll be left with some money that you either have to pay or get back. That's what the notary shares together with the final deeds. And then on their transfer, you'll go to the property to inspect the property, make sure that it's in the same condition as when you last saw it in, that nothing is damaged, and then you actually become the owner at the notary. Then you have about 2 months to inform the seller about anything that should have been mentioned on the date of transfer before. Don't wait 2 months. Wait maybe a couple of days, and then gather all that information. Say, hey, sorry, but this is not working. It should have been working. You never disclosed this, so we're going to hold you liable. It doesn't happen very often. We had it happen once, where somebody was actually buying a property. The power socket wasn't working. After inspection, they needed to pay about 2 grand to fix the whole circuit. And that was 4 or 5 days after they actually moved into the new home. That's a big surprise and a bad surprise. So we went to the seller saying, hey, sorry, you should have informed us about this. You lived in the property for 6 years, so you should have known. That's the timeline. Now, we do get a lot of questions asked, and we've listed a few here, and then I think we'll go over the questions that you guys have. I think this is your forte, Ludo. Take it away.
It is cool. Well, thank you very much, Kimo. Thank you as well, Robin. I'm going to move directly to you, Robin, for the question. It goes as following. Can I get a mortgage with a temporary contract or as a freelancer, or as, for example, a starting entrepreneur?
Good addition. Very well. So let's start with the first one. Can you get a mortgage with a temporary contract? Yes, you can. True, there can be some things to consider. So usually when you have a temporary contract, just make sure that you covered the probation period. But after that, if you want to close a mortgage on a temporary contract, you can. Usually what is required, what is the best thing to give you the best starting point is when your employer signs a so-called employer's statement. And then on that employer statement, that's kind of a confirmation of your contract, your personal information, and your salary. But also they can tick another box and they can state, well, if he or she has the same performance in the next period of time, then we are intent to give you a permanent contract. That's a declaration of intent, and it's an intention. So they don't necessarily have to follow up on that follow through on that. They can just say, okay, we intend to do that, and then later on just let it go, because it's not legally binding. But it is very important for the bank, because then if you have that declaration of intent, then the more your contract will be regarded as full-time, as a permanent contract. So that's something that we can definitely use. So then it wouldn't make a difference. If that's not an option, there's still a ton of options to do secure mortgage on a temporary contract. So don't let that withhold you. Just make sure that you feel comfortable there as well, that you do feel comfortable with the temporary contract to close a mortgage, because it's a long-term commitment that you do. Now, that's the temporary contract taken care of. So when we look at a freelancer or a starting entrepreneur, so the thing is, what you can read on the online a lot, and what you might hear from other financial advisors or banks usually, what they tell you is they need 3 years history of your own company, and that's not necessarily true. What we need is at least 12 months of history of your own company as a freelancer or entrepreneur. And then we can already start looking into your finances as well to see what your mortgage possibilities are. So 12 months is the minimum, but from then we can definitely close a mortgage on that income. Of course, then same thing applies for this as a temporary contract. Do make sure that you feel comfortable and you think, well, it's a stable income for long term as well. But that's something that's more something that we'll discuss with you when we look into your finances. But definitely, there are possibilities on a temporary contract, a freelancer, and a starting entrepreneur, as long as you have 12 months.
Perfect.
Cool. Thank you very much. All right, next one is for you, Kimo. What actually happens if you want to leave the country after several years?
Good question. I think the majority of you guys are maybe staying here for a lengthier period, but at some point maybe you want to move back, and or you relocate again, or who knows, right? There's 3 options. You can keep your home, but you'll have your mortgage costs. It's not illegal to have a home while living abroad, so that's fine. But mortgage costs and taking into account taxes as well. Then the second option is you can rent out your home, but you need permission from your bank. I think Robin will share a little bit more about that. So it's not as simple as just going away and putting a tenant in your property. You need permission from your bank. And the last thing is that you can sell your home without penalty or capital gains tax. So the penalty refers to the mortgage. So if you sell your home, you can pay off your mortgage without penalty. And if you sell your home at a profit, then the cash that you win on top of that property is all yours. So 3 options if you want to move out. And again, if you buy for a little bit longer period of time. If you want to rent it out, then definitely have a chat with the guys at Mr. Mortgage.
All right, thank you for that. Back to you, Robin. Is it actually possible to rent out my house or part of my house, for example, a room?
Yes, sure. The thing is, you have to consider a couple of things. So let's start with the latter in this case. Can you rent out a room? Sure, you can. Just make sure that you are still registered there. That's the most important thing. And then your mortgage can pretty much stay as it is. Do consider that the rent that you get then can be taxed to a certain amount. So a certain amount is free from tax. And then when you go over that, then it will be taxed. If I'm not mistaken, it's somewhere around $345 per month. That's something I'd have to double check, but that's around that number. When you rent out your house, your entire house, that's a different ballgame altogether, because then what that means is that you have a residential mortgage. So you bought a property, you took out a mortgage with the thought of living there. Then when you change that, and that's kind of the number 2 that we just looked at, so when you don't live in the property anymore, a regular mortgage lender will not allow you to rent out the property without their permission. And when they give permission, that's when your company sends you abroad, for instance. Then you're allowed to rent out your property for a specific term, so 2 or 3 years, for instance. If you want to keep on rent out your property indefinitely or for the foreseeable future, then your mortgage would have to be adjusted from a residential mortgage into an investment mortgage. And that's the most important thing. So then if you don't do that, sure, a lot of people don't change their mortgage actually when they leave the property and renting out. Sure, you can, but the thing is that it's directly against the rules and regulations of any lender. And when they find out, they can make your foreclosure right away. So that means that you have to repay the mortgage directly, or you have to sell the house. And I can tell you that's quite a bit harder when there's somebody living in there. because then that tenant also has rights. You cannot just kick him out because you didn't follow the rules of the bank. So that's something to consider. So then refinancing. So both, yes, you can. Both have different situations to take care of.
Cool. All right. Moving on to the next question. Question for the both of you, actually. And let's start with you, Kimo. What impact will COVID have on the market of mortgages and on housing? Let's start with you in regards to housing.
Yeah, good one. Let's go back to early 2020. COVID hit and nobody really know what was going to happen. Things went from 0 to 100 in no time. I remember thinking, that's a Chinese thing. It's not going to come here. And then it being in Italy, it's an Italian thing. It's not going to come here. And boom, before you knew it was here. We could, of course, seen it coming a little bit, but what impact it had, we did not know. I remember some clients backing out of actual purchases because they felt that it wasn't a good time. There was a lot of insecurity. If you'd asked me by then, that was before actual government interference and funds and subsidies were introduced. I was very bearish when it came to the market. So I think that things have changed since then, because first we saw kind of like people retracting. This is maybe the first time. It's maybe, I hope none of you have actually experienced it, but it's kind of like a little bit like a tsunami. Like first you see the water go back and you're like, what's going on? And those are all the people that were retreating from the housing market for a short period of time. And then boom, suddenly when people were experiencing what an actual lockdown meant and they couldn't spend any money, they were saving money, suddenly they would start looking around. They were like, okay, so this is, yeah. So this is what I need to focus on, because I might spend the next couple of months here, and that was their home. So suddenly people were flooding the housing market, and that didn't stop for a very long time. It still hasn't stopped really, because then the government started to introduce even more fiscal benefits, so like the transfer tax deduction, stuff like that. So what we've seen is that since kind of like summer last year, we've seen a steady increase in number of people actually moving towards buying a property. And the rental prices decreased a little bit last year, but now we're seeing them stabilize and increase again. So I think that that trend is not going to end. On one other thing that we saw is that people were initially leaving the city. They wanted more space and so on. But now that cities are safe again and things are opening up again, we're seeing people flock towards the city again as well. A lot of companies are kind of like backtracking on their work from anywhere, work from home policies. It's very difficult, especially if you're a major company, to have these policies in place from HR, tax perspective, and safety perspective. So that is something that we're seeing. So cities are attractive again, and prices, you might have seen it, prices are increasing almost everywhere. I think it was in the 34 or so countries, I think prices are increasing, increased last quarter. So it's not just here, it's everywhere. And let's say the end of this year, like winter creeps in and we have maybe a different variant of the virus and companies or countries or governments are locking down a little bit again, I think that that kind of like focus on homes will continue. And it's definitely a good thing, right? Especially from a livable perspective. I think that if you have to spend time in your home, then you want to make sure your home is comfortable enough to live in, to have that extra study and so on. Down the line, or in the long run, it's difficult to forecast, because I don't know. At some point, the bills have to be paid, right? Unless all the countries are saying like, "Hey, let's cross out the debts that we have, and let's leave it at that." I'm not sure if that's going to work, and at some point, we'll have to see something. But who knows? It might be this is the first time that we're being in something like this. It might be that the majority of the countries, especially Western countries, have dealt quite well with it. So we won't see any impact. But I do believe that a lot of money is still in the market. Like we're seeing it, whether it comes to investors, whether it comes to people spending on homes, so on, so on. And like, I haven't lived that long, but and this is my first proper conscious crisis, right? I do expect that we'll see some impact, but who knows? Like the prices have gone up, and if they continue to go up in the next couple of years, then a dip is not a bad thing, right? A dip also allows starters to actually enter the market. So I think we'll see what happens in the next 3 to 5 years. I think it's too early to say now, and I think that next year and the year after is still too early to say as well. But I'm positive, and Yeah, I hope you are too.
Cool. Thank you for that. You're next, Robin. What's it gonna do with the mortgages?
Yeah, so the mortgages and the housing market obviously are intertwined. They follow up on each other. So that the thing with mortgages mainly. So let's take a look at first from the lender point of view. So lenders were a bit skittish at first as well, and they kind of so they were a bit more strict. So they need more paperwork. So it was a bit more work, a tiny bit more work to get a mortgage done, and sometimes it took a bit longer as well. But now things are looking to cool down a bit. Also, the banks and the lenders do relieve that additional strictness in paperwork mainly. So that's one thing that is a slight dip that we experience there. When it comes to mortgages, really something that you'll really experience is the interest rates, obviously, because that's the main thing. That's a hot topic always when it comes to mortgages, is the interest rate, because that's really the money that you pay to use the money from the bank, of course. So then what we saw happening, the interest rates were ridiculously low, very low, at start of just before COVID hit, so start of 2020. And then we saw a slight increase of 0.2%. So where they were 1.5, then they increased to around 1.7, 1.8 sometimes. So that was for, I think, so that was around March, and then in when summer hit and everything started looking better, and the housing market really started flowing again, and people indeed want to move abroad and see fields when they open their windows and openness and space and indeed that additional study. Then we also saw interest rates decreasing again. And they have been decreasing ever since, and now they're around the 1.45 to 1.55, approximately that range. So we're back on that lower rate, really. So in that sense, it didn't really that much impact the mortgage market in that sense. And for the future, who knows really what's going to happen. We experienced just the last 2 years that anything really can happen, but we don't necessarily expect that the interest rates will increase significantly. There's a couple of reasons for that. Kim already mentioned that the government does have something to say here and there about in the business market as well, and also the mortgage market in a sense. So if the interest rates would suddenly increase significantly, that would not only impact mortgages, but also loans that companies would have, for instance. In that sense, if companies would suddenly have to pay far more, then the whole economy would go belly up. So that's not something that the government would allow as well. So I don't expect interest rates to increase suddenly. So therefore, still, I foresee a bright future in that sense. Next 2 or 3 years is something we can kind of expect, tell you an expectation. For a lot longer, 5 to 10 years, that's really hard to say what the impact will be, of course.
Perfect. Ludo, I have a question for you. Because you're in the market a lot, right? You're dealing with a lot of people that want to buy a home, and you're trying to support them as much as possible. Do you experience anything like after effects or still residues or name it from COVID? What is your experience when it comes to that?
Not really, to be honest. If I compare the asking prices and market values from Q4 2020 and the current market values and asking prices, it's been going up, right? We have an increase, I think, of 8.6% in the north of the Netherlands since Q4. And like you said before, we only expect this to rise. People have really started appreciating their homes and been appreciating the space and the need for outside space and office space or things like that. So I don't expect any drops within the near future. Definitely not.
Cool. Perfect. Thanks.
Cool. All right. Well, the next question is for you again, Robin. We've been hearing things like a deposit, closing fees. What is the 10% deposit that you need to complete?
Yeah, so that's standard in any purchase agreement, really. So you place a bid, your bid get accepted, purchase agreement will be signed, as you can see right here, and then we start the mortgage application process. So then it says average 4 weeks, and true, we don't necessarily need 4 weeks. Usually it's around 2, maybe 3 when it's really busy. at the banks, that is. And then your mortgage got approved. Happy days, you got the confirmation that you can buy this property, and you just have to wait until you can go to notary, really. But the seller doesn't really know anything. Because essentially you can just pack your bags and you go off into the sunset and never to be heard of, seen of again anymore, and that's it. And the seller still doesn't really have anything, and they have to start over this whole process right away, all over again. So what is put in place is a 10% security deposit. That means that when you do purchase property, then you have to, after usually around 5 weeks, you have to secure a 10% security deposit, and that is something that will be sent to the notary. The notary will keep it for safekeeping, and the security deposit being what it is, when you hold up your end of the deal, meaning that you actually move forward with this transfer, then this security deposit will be relieved again and will be sent back to you. So that's 10% that will go to the notary from your pocket to the notary to make sure that you actually follow through with the purchase of the property. If you don't, then this 10% goes to the seller. Now, there's two ways to really take care of this. One is to take care of the transfer yourself. So if you have these funds available and you want to use your own funds, you can transfer the 10% to the notary. Now, if you don't want to do that, or you don't have those funds available, nothing to worry about. You can also opt for something called a bank guarantee. And that's when the bank or a financial institution will secure this 10% security deposit for you. Unfortunately, they don't always do that out of the kindness of their hearts. They usually want something in return, and that's always money, of course. So they will charge you a fee of usually somewhere between the 300-400 euros or a certain percentage of the bank guarantee, and then it will be taken care of for you. Usually your financial advisor will take care of this for you as well, but that's really it. So it's 10% that has to be secured at the notary to make sure they actually move forward with this purchase.
Cool. Thanks very much. Well, I'm going to start with you, Kimo, for this one. We've been talking a little bit about ourselves, of course, as Expat Housing Network, but also from a Mr. Mortgage perspective. If people would like to work with us, what are our fees?
Good question. So we have two different packages. We have a smart package, which is kind of like the digital service that we offer. So what we do is we do an intake. We are your personal buying managers, and then we review all the property documents, and we actually do the market evaluations for you. So we give you a valuation range, and we're pretty good at that. So the appraiser will actually value the property within that range most often. So we submit offers, we negotiate on your behalf, we do legal document reviews, purchase contracts, property documents, and then we'll also book in third parties like appraisers, technical inspectors, notaries, stuff like that. And we'll, of course, make sure that the whole process thereafter runs smoothly as well, and we'll support during transfer. But we're not going to hold your hand, so we won't be present. This is kind of like a package that we invented during COVID, and we've seen that a lot of people are taking these. We normally, I should actually put like a little thing here that says most popular, because it is actually the most popular package. The complete service is for those of you who do want us to join you, and we actually will schedule viewings on your behalf. We will attend the viewings with you. We'll actually attend the notary as well, the technical inspector. But besides that, we'll do exactly the same thing as SPART. The only thing is that we'll manage the viewings and attend with all appointments. So this is what we charge. It's including VAT, no hidden fees, no hidden taxes, no nothing. This is what you see is what you get and what you pay. And this is what we charge. So that's us. Robin, how about you?
There we go. Yeah. So our fee, we work on a fixed fee of 3,250 euros. And for that, we don't charge VAT because it's not charged to us. So that's why we don't charge it to you. And like Kimo already mentioned sometime before, our fee is tax deductible. What you get for that is we guide you through the whole process, really, from the moment that you start considering buying a property until you have the keys in your hand, and also really 30 years after, because when your mortgage got approved, that's not when our relationship ends. It's we are in it for the long haul. So if you have any questions when you have your mortgage, we'll be your point of contact. You can always contact the bank directly, but if you have any basic questions, you can always check in with us. and we'll guide you through any choices that you might want to make during your mortgage. But before you get there, the whole house hunting process will guide you through. So whenever you find a property you think, well, that might be interesting, just send us a link and we can revise everything to make sure, all the calculations, I mean, so to make sure that you know everything about your mortgage and your financial possibilities before you put in a bid, and even maybe before you do a viewing if you want to. So then you can go into the viewing with confidence that you know, okay, well, if I liked it, like this, I can put in a bid, and I know my finances are secure. So that's what we do. Then obviously, when your bid got accepted, we'll take off your mortgage application. We work with over 30 banks, so we can see what the best fit is for you. We always like to kind of nerd out on all the specifications also to make sure that everything is really tailor fit. So that's what we do. We'll set up a financial advisory report for you. That means that it's a big purchase, so you want to know in what way your finances have changed or what new financial risks you're subject to. So that's also something we'll take care of. Through any documentation that you have to sign will be in Dutch, by the way. We'll supply translations and set up a call to make sure that you actually understand what you're signing, because that's very important, of course. So that's really what we do. Any insurances that you need when it comes to life insurance, for instance, that's something we'll take care of, and that's all within our fee. Like Kimo said as well, same applies for us. We'd like to be, we are as transparent as possible as well about our fees. We are open and honest there, so we want to make sure that what you see is indeed what you get. So that's us.
Perfect. Thank you. Now, we are going to share our last poll. We'd love to learn from your end what you thought of this webinar. If you have any questions, then please ask in the Q&A, and then we will try and answer the majority of them in the next couple of minutes. But first, we'd love to learn from you. How would you likely you would be able to refer this webinar to a friend or a colleague? Did you miss anything during the webinar? If so, what did you miss? If the reason of what you miss or the thing is not in here, then you can technically put it in the chat, and then we will know that as well. Perfect. So seeing some good scores come in. I see 7, 8, 9, 10s, more 10s, more 9s, 8s. For those of you who've scored a 6 or below, please let us know what you missed and what you would like to see improved. Maybe leave it in the chat or send us a quick email. Did you miss anything? The majority of you said no. Some of you said yes. What would you like to get more information on? The actual buying process. So that's, of course, very broad. So we'd love to be more specific there. The mortgage process, same thing. Like, how do you apply for a mortgage? What is necessary? I think this is something we can definitely talk about during those intakes. And then we have third-party costs and what a winning bid is. Perfect. Thanks a lot for sharing your information. I think this is the time where Ludo also shines, the Q&A.
Thank you. Always my favorite part. I can finally talk now.
Mhm.
Cool. Yeah, so we will answer all the questions that we have in the Q&A. Please, if you have any other questions, pop them in the Q&A. I'll first go over everything in the Q&A and then move over to any questions we have left in the chat. Please excuse my pronunciation. We have people from all over the world, so I'm going to do my best to pronounce it as best as I can. We were talking a little bit about transfer tax in the beginning. I'm going to start with you, Robin. You were talking about, well, 50%, someone, if you buy as a couple, someone is paying 50% on their side and 50% on the other side.
Yeah.
What happens if we decide to split the property, for example, in 20% and 80% ownership?
Then the transfer tax will have to be paid accordingly as well. And that might be a way to indeed have to pay less transfer tax, for sure. The other hand, it's also important not to only look for the short-term solution. So you might have to pay a couple of hundred or maybe a couple of thousand euros or even less. Sure, that sounds very appealing, but also make sure that it's good for the long run. Just to add a bit of information there, what is a common misconception is that you have to be married or you have to have a registered partnership when you buy property or get a mortgage. That's not the case. You can, two complete strangers really can take on a mortgage. I wouldn't advise it, but it would be an option. But then it's very important to make sure that you now already decide how do we deal with the property when we split up. Now, when it's the ownership is split 20/80, and the split up doesn't go so well, the person that has 80% can also really say, well, okay, the increase in value, 80% of that is mine, where you might have paid equal amounts of the mortgage as well. So those are things to consider. So don't only look at the short-term saving of money, but also on the long-term consequences it might have. But true, if you split it 80/20, then 80% then it will be split equally when it comes to the transfer tax as well.
Okay, cool. Thanks for that. Moving back to you, Kimo, I have a question from Ilya. He or she asks, isn't a technical inspection mandatory for properties insured under NHG? Is that correct?
I think it is good to do it, definitely. Yeah, I think that NHG will require you to understand what the condition of the property is. So, yeah.
Okay, all right. Then, well, back to you, Robin. Question from Patricia. She says, well, I'm being paid not a bad amount, not a huge amount of salary by a British employer, being paid in pounds.
Mm-hmm.
Is there any chance I can get a mortgage in the Netherlands?
Well, first off, thanks for your question, Priscilla. Great question. Yes, it is possible. True, there are less lenders are prone to give out a mortgage based on income in a foreign currency, but there are definitely possibilities there. Yeah.
Okay. All right. Kimo, for you, from an anonymous attendee, he or she asks, I would love to know if buying a fixer-upper is a thing in the Netherlands. Houses, apartments in older buildings that are renovated by the new owner and have the potential to be sold for much higher price after the renovations. Also, what's the max age of a property you would recommend to buy for it to be a profitable investment property?
So this is actually something you pointed out a while ago, Ludo. You have a platform called Fonda Makeovers, I believe. It's like an Instagram page, and
Very
there
nice.
they show photos before and after. It was a good tip. So it's definitely a thing in the Netherlands, buying properties that look shitty because maybe grandma lived there, died there, and left a place that looked like it was from the 1800s. Although that could have its charm. But so fixing up properties could definitely mean you add value to it, because also I think a lot of people are looking for properties that are renovated, that are in a really good condition, and they just want to move in. They don't want the hassle of fixing it up. Your second question in terms of what is kind of like the oldest, so this is a tricky one, right? I think that when it comes to fixer-uppers, my gut tells me go for properties that have character on the outside and can be refurbished well on the inside. If you buy properties that are built in the 1970s and 1990s, I think there's a lot of very ugly buildings built out there. So I think that has an influence on what you can resell the property for. So if you were to go for a property, I would technically advise you to go for a little bit of an older property that has charm, that has character, versus a property that is relatively new. So I think I would flip my pun intended, no pun intended. I would flip the question around and say, okay, hey, I would focus more on a little bit older properties and make them look really nice. Of course, do a good job as well, because we see a lot of people that try to kind of like renovate it but use cheap materials, and then they technically just sell a lipstick on name it, right? It's not a very sustainable thing, but it happens. So what I would do is if you want to stay in this business, I would go for a good contractor, fix it up with good materials, sell good quality, then you'll have happier buyers as well. And who knows what you might end up with. So
Perfect. Cool. Thank you. And Fonda Makeovers, don't forget it. Super nice.
Way to go. Maybe add the link in the chat.
Yeah, I will for sure. Then I have another question from an anonymous attendee, this time for you, Robin. Is it actually possible to buy a property in the Netherlands without being actively employed here, but you do have enough savings for the down payment and plan to rent out the property entirely to pay off the mortgage? For instance, if one is a student in the Netherlands and wants to buy a property with the sole purpose to rent it out entirely.
Yeah. Good, very specific question. I like it. Honestly, probably no. The thing is that with any mortgage, so with the regular mortgage, you do have to have a base income. But I understand your logic. When you want to buy a property to rent it out, then you have rental income. Therefore, with that, you should be able to repay the mortgage. Now, and the thing is, when you buy your first property, investment property that is, there's no rental income yet. So when you want to have rental income to base it on, it already has to have a history of a year. So then especially with the first investment property that you buy, the bank will want to know that you can also afford it based on your own income. So you do have to have an income, because for the bank, you're new to investing in property in the Netherlands. So therefore, they will not base it only on the expected rental income, but you do have to have a basis and a kind of a safety net in your own income.
Okay, cool. Thank you. Then I'm going to stay with you, Robin. I have another question, a question from Anna. What options can be used to increase the total amount well, for your mortgage cap? Are there any certain things that can increase your mortgage cap?
Well, good evening to the
Tiger.
cat out there somewhere.
As well.
So how to increase your maximum mortgage amount, I expect. So you have a base income. Now, for one, your holiday allowance can be included. And well, this question actually is the reason why I don't really like online calculators, because then you can fill out your information, but they always have to have specific settings of different variables that you use. So your calculation of a mortgage is subject to quite a few variables. So what kind of income do you have? Do you have a 13th month that you might not have included there? Has your holiday allowance already been included in your base income or no? Do you receive a bonus? And if so, how many times have you received that already? Or are you a sales representative and do you get a commission? That could also increase the mortgage amount. So that's all based on the income part. Now, the other part is the interest rate. Now, I won't go into too much technical detail of your mortgage, but the interest rate is also a very important thing. And then usually the lowest interest rate would get you the highest mortgage capacity, but it's not always that black and white. So it's also about knowing your way around that situation to get the highest mortgage. So make sure that you don't only use online calculators, but do check in with a financial specialist as well to find out what your actual mortgage capacity is, and you might be surprised there as well.
Cool, thanks very much. For you, Kimo, we haven't touched base on, well, typical Amsterdam thing, ground lease. Can you explain a little bit the pros and cons of, for example, full ownership compared to municipal ground lease?
Yes, I'm going to answer that question, but I had the chat open and I saw a message come in from Ilya, who shared a link for people who are interested in property valuations estimations without paying to the cadastre. And she shared something called the VOZ Waardeloket. First of all, I think it's lovely that you want to help out, Ilya, but I think one of the questions that you asked me earlier on in this chat was, what are some of the mistakes that I made or that we made or technically I made when I started buying a home? And this is a classical one. I had to laugh when I saw that because, what was it, maybe 7 years ago? I was very keen to buy a property. I was living in a property, I was renting it, and I thought, let's see if the seller wants to sell it, or the owner wants to sell it. And then back then, I didn't have any experience in this market. And what I did is I called the dad of a friend who was a realtor back then, and but he was a realtor in a more rural area, right? And he said, "Oh, just look at the WOZ value. You can find it online, and then just base your offer on that." The WOZ value is the value that the municipality gives to the property, because they have to define what what the taxes will be on that property. So what they do is they define the value based on big data. And what people tend to forget is that most of those valuations are old valuations, and they're not super accurate because they just look at big data and they don't look at the specifics of your property, right? So it could very well be that you have a recently renovated property that's worth much less as the WOZ value. So what we did is we looked at the WOZ value and then we said, okay, let's offer just a little bit over WSZ value, and then we submitted an offer, and we just got laughed away. They were like, seriously, dudes, like if you want to submit a serious offer, don't look at the WSZ value, because the WSZ value was about what 15% lower than the actual value, and we went about 2% 2% over the WSZ value. So yeah, definitely lovely that you want to help out, but the WSZ value will maybe get you close in areas where pricing fluctuations are not that high on an annual basis. If they are anywhere close higher than 3 or 4% on an annual basis, I wouldn't necessarily use the WOZ value to define the market value. But either way, thanks for the tip. Now I think that the question that you had, Ludo, was was it about ground lease? What the difference between municipality owned and privately owned versus
just
okay,
to
so,
hop back on the WZ value, indeed,
yeah.
to give a date on it. If you look now at the the website that Ilya shared, the date of which is mentioned is the 1st of January 2020, and therefore based on data from 2019. Well, we're already in the 7th month of 2021. So there's a big difference there for sure. Indeed, ground lease. Please.
Ground lease. I'll keep it short. So you have 3 types of ground lease. One is you own the ground. So the people that buy or own the property own the ground as well. That's great because you never have to pay rent. The second one is the municipality owns the ground. Then you have to pay rent on an annual basis. Most time they cut it up in two slots in the on the year, but you'll pay the municipality for renting the ground. Then a third one is privately owned. If somebody else owns it, it's not a municipality. I would steer clear from that as much as possible, unless the general terms and conditions, the bylaws, and so on are a copy of the municipal ones. But please do your research when it comes to that, because banks don't really like selling or buying or giving mortgages to people that buy properties on privately owned ground lease. Why? Because the owner of the ground can say after the time slot is ended, hey, I'm going to increase the ground lease rent by this amount, and then that might endanger your ability to pay off your mortgage. Let's quickly go back to the municipality ground lease, because that's the most common one that you'll see if you see somebody else owning the land. And what you sometimes see is that it's paid off for a certain period of time. That means you don't have to pay until that time expires. And then what they'll do is they'll recalculate the value of the ground and everything on it afterwards. And then you'll start paying after the time expires. Sometimes it's set for a specific period of time, and sometimes it's paid off for indefinitely. You don't own the land. Municipality still owns it, but you kind of like bought the right of never having to pay ground lease again. And also the future owners don't have to do that. So those are the type of ground leases. It has an impact on your mortgage capacity. So if you find a property that's on a ground lease and you pay on an annual basis, talk to Robin and his team, because they'll be able to tell you what the impact will be on your mortgage if you have a ground lease property. Hope that answers the question a little bit.
I think so, for sure. Cool. All right, back to you, Robin. I have a question from Akemi and Donald. Again, if I'm pronouncing that correct. What is the minimum, if there is any, percentage of a down payment required to get a mortgage?
It really depends on your personal situation. But essentially, you would be able to, basically, you can finance up to 100% of the property value in the Netherlands. And then it's very important that's the property value, not necessarily the purchase price, but the property value determined by the appraiser. So that's no down payment on the mortgage based on the purchase price or the value of the property. But again, it kind of depends on your situation and the bank as well. So there are at least about 50 different banks, I think. Some banks do require a 10% down payment when you're not a Dutch resident, but there's sufficient, there are over 30, 35 banks that I have no problem to give out 100% mortgage to anybody, really.
Cool. All right, thank you. Well, we talked a little bit about how the WSZ value has impact on your taxes.
Mm-hmm.
Kimo, can you share a little bit with me yearly costs that come with owning a property.
Yeah, good question. So,
well, PVE costs as well.
Who asked the question?
Well, I'm not 100% sure. I saw it and then I scrolled past it and I remembered
Okay. But it's a good question. Whoever asked it,
Yeah.
you out there. So there's a couple of things you need to take into account. When you buy a property which is part of a owners association, so you buy an apartment in a building with multiple owners in it, then you'll pay service fees on a monthly basis. That is most likely somewhere between €1.30 and €1.60 per square meter on a monthly basis. So that's one thing you have to take into account. Of course, you have insurance. If you want to get content insurance out, that's important. Of course, you have utilities. It's also monthly. It's also linked a little bit to the size and the energy sufficiency of your property. And then you'll have municipality taxes. This is for using the municipal system, so garbage pickup, sewage, water taxes, stuff like that. Take into account that's going to cost you between 500 and 600 euros. Then you'll also have property tax, which is a very small percentage of your WOZ value. I always forget to get like was it 0.0034 something percent. So a couple $100 a month a year as well, and then you'll have. But this is more likely something, especially if you have a mortgage, homeowners tax. It's not something that you actually will see as a kind of like an invoice sent your way, because what happens is when you get your interest deducted off your taxable income, then at your tax filing, most likely what they'll do is then they'll say, okay, this is technically what you get back from your interest deduction, but you have the homeowner tax, we'll deduct that off that, and then you're left with a certain amount. So yeah, I think I've covered the majority of the taxes now. Did anything else? No, I think that no, this is the most important. So how much is that total? I will do a rough calculation for you and I'll get back to you after one or two questions.
Cool. Thanks for that. A question we get asked a lot for you, Robin. Is it possible to get a mortgage based on well, a 13th month or a bonus? Can that be added into the mortgage calculation?
Yeah, for sure. Yeah, that's kind of adding to the question asked before. How to increase your mortgage capacity? Well, your 13th month can be regarded as income that a mortgage can be based on, because it's money that you can spend freely. Same goes for a bonus. Then it kind of depends on what bank we go with to see how they deal with bonuses, because pretty much all banks use different ways to take that in account, in consideration. But yeah, it definitely does increase your capacity. What kind of a rule of thumb is if it's money that you can spend directly. So if you can go on holiday from the money, then you can use it for your mortgage really as well. Why I mentioned this is some people also get a car allowance, for instance. So you get a certain amount per month to spend on transport. That has a specific goal, and therefore you cannot use it in your mortgage calculation. Same goes for right now. You have working from home allowance, for instance. That also has a specific goal, and you might not necessarily need it, or you do grocery shopping for it, which you would have done anyway. But then it has a specific goal, and then you cannot use it. If the specific goal is holiday, so holiday allowance, that is okay.
Okay, all right, thank you. Timo, question for you from Mario. How important is it to check the foundation of the property in the Netherlands? It seems that this needs to be changed every few years, and it's quite a huge cost.
Yeah, that's a good question. So what I would first do is I would get a technical inspector on board, and of course get somebody to support you with the purchase of your property. Because if there's any mention in the property documents about foundational issues, then it should be noted there. If it's not, and the seller has never had any issues with it, but if the technical inspector comes in and says, okay, hey, there's a few cracks in the wall, they might be because the foundation is kind of like bad, then you want to double check that. But I wouldn't necessarily do it kind of like get a foundational inspector in per definite, right? I think that what you want to do is you want to first inspect the property and make sure that you understand if there's any issues from the past. Then you're mentioning that it has to be renovated every couple of years. That's not really the case. So you can actually have a foundational inspection done, and then what they do is they give a certain criteria to the foundation. They say, okay, hey, it's state 1 or state 2. Most often we're talking about 20 years to 50 years that it's in good order. Of course, with the older buildings, and if nothing has been done for a number of years, then you might kind of like want to have somebody inspect it. But technically, I would first do a visual inspection and a legal document inspection to see if that's the case. If nothing arises, then it's a very costly expedition to have the foundations being inspected. So most of the time they dig holes in the front and in the back and so on. But if you feel that the building is not secure or there's cracks or it's tilting a little bit, then you might definitely want to do that. If you feel that the floors are uneven, then you might do it, but I wouldn't standardly put it in.
Okay, all right. Thanks very much for that. We're slowly going to start answering the last 2 questions. There are, well, quite some other questions left, but well, I would recommend book a intake either with Robin, with me, with Kimo, or with one of our colleagues, so we can one-on-one answer all the questions that you guys have. Final question for you, Robin, here is a question from Rachel. Here she asks, we have seen that having a student loan significantly decreases your allowed mortgage amount. Would you recommend paying the student loans off before applying for a mortgage?
You can. If you really want to maximize your mortgage and you need it to be repaid, then you can. But then the thing is also just first check if it's necessary. So a student loan will significantly impact your mortgage capacity, that's true. But first, make sure that if you buy a property, that you actually need to pay it off to get a mortgage on that property. Because if you don't, then you might not necessarily have to repay it right away. If you want to go to the max of your mortgage, then it could definitely make sense to do so to increase your mortgage capacity and give you more flexibility. Yeah.
Okay, perfect. Thank you. And then, well, the last question for you, Kimo, is a question from Bargov. What are the chances that my offer gets rejected, and what points should I, well, include in my offer to decrease the chances of my offer getting rejected?
What are the chances of my offer getting rejected? That's the question, right?
Correct.
It's a tricky one. So I think that you have to look at it in following way. So of course, supply and demand make up for how competitive your offer has to be, right? And this is like a question we had before, if you find a property that's recently renovated and attracts a lot of potential buyers, like try to find out as much as possible from the selling agent how many people have viewed the property. Also, like what you can see is the property sold in the neighborhood or in the area that are similar, what did the prices do there? So I think that what you need to do and define is, okay, first of all, talk to Mr. Mortgage, figure out what you can borrow, then figure out how much savings you have to put up towards the closing fees, but also to put up towards maybe a competitive offer. And most likely the offers currently being placed are over the actual asking price and over the actual market value as well. So you need to define how much you can actually spend. And then you figure out, okay, hey, so how popular is this property? How badly do I want it as well? Because if you're at offer number 6, you might behave completely different than if you're at offer number 1. I understand it from an emotional perspective, but I think that what you want to do, if you want to submit an offer on a property, make sure you actually want to move forward with it and that you're actually dedicated to it. So what I would then do is figure out, okay, hey, so what are we expected to kind of like expect, or what can we expect from competitive offers? Are people going nuts for these properties? The more high end, the more likely people will go nuts, unless it's very priced very highly. So make sure you understand that market value as well. And then based on that, you can say, okay, market value plus a certain amount of money based on what I feel is enough for me to offer, or at least that I feel comfortable with offering, and still competitive offer. If you feel you want to go a little bit higher because you really want that place, then make sure you at least can afford it. But I will never be able to tell you what the chances are of your offer getting accepted unless you submit a ridiculous offer. But honestly, I've been there, right? I've been where people submit ridiculous offers. I'm like, are you sure you want to do this? Right? This is a lot of money. And they were like, yes, we'll do this. And then we didn't get the offer accepted. Right? So there are always people who can go more nuts than you can. But I think the most important thing is that you feel comfortable with, okay, so I've submitted this offer. If somebody, so you know how you like when you strike a deal and somebody says yes too quickly, like when you submit an offer and you've heard all around you that your first offer is not going to get accepted, and then the selling agent says, congratulations, your offer is accepted, then the first thing that always comes to mind is like, oh shit, did we offer too much, right? So it's very, very important that you understand what you feel comfortable with offering, because it's going to put you in a financial situation on a monthly basis. But I think if you're considerate, if you have enough money in savings, then you can definitely stand a really good chance. I'm partly at fault for ending the webinar by this time. I have a daughter who's waiting to get tucked in, and wants to still pack her suitcase with me. We're flying tomorrow. We're going away, so that's part of the reason. But technically, we'd also love to answer your questions during intakes. We're going to share this presentation with intake links to both Mr. Mortgage and us. If you already want to book something in now, I left the link in the chat as well. I'm not sure, Robin, if you can also add the link, or maybe just add the website in there. I want to thank everyone for attending, for answering or asking your questions. Ludo, you were a rock star as always. I think that soon you'll bump me off the throne here and be managing the webinar, and I'll do the Q&A. But definitely, thanks a lot, Robin. You as well. Great work. I really appreciate you sharing your knowledge, your insights, and looking forward to working together even more in the future. Thanks, everybody. Have a lovely evening and a lovely end of week almost. We're halfway there. So have a great day and take care. And we hope to really see you soon in the future. Thanks, guys.